Kelby, have you ever heard of private banking? I have. Infinite banking, private banking. Uh, and if you're talking about the whole life policy, or are you talking about, well, bottom line, it's pretty much all the same through insurance companies and loaning yourself money versus um, all for tax strategies, tax savings. And correct me if I'm wrong. There's really not a need for that when you have a foundation that is completely tax exempt, where you can keep money and just pay for things through the foundation. Everybody wants to get real tricky because they have to. They're operating in the office of the person. They got tax liabilities and tax issues. So I first and foremost, I agree with life insurance. I think it's something that the spouse should have upon the death of an individual. But at the same time, it's jurisdiction 101. Life insurance policies, um, if done right, can be very, from a tax strategy standpoint, very, very beneficial for a United States citizen. I don't personally see that need whatsoever as a state citizen. I'm not operating in debt, and anything that I want, I use a card or send cash or make a trade. There's not a need for me to have that. If I'm not answering your question properly, meaning I don't have a need to do the whole life policy, cash up the policy. And you got to remember, when you're cashing up those policies, you can only cash them up so high, because if the policy cash amount is higher than the life insurance limit or the life insurance benefit, you trigger, I think it's called an MOC, where they do an automatic purchase of more life insurance. And so you're always going to have a cost of life insurance. You're always going to have that benefit triggered for your spouse upon your death, but you're going to also have the benefit of being able to loan yourself money through those policies. But as a state citizen, there really isn't a need, because number one, you don't file a tax return, so there's not need for a personal benefit of a tax strategy or tax savings or a tax deduction or and all these people are trying to figure out, like Elon Musk. Uh he didn't pay himself a salary. He was actually pretty smart. When his Tesla stock started rising up, he went down to the bank and got a loan against the value of his stock. And so, in a loan, there's no income whatsoever. And that's the same principle that people are trying to do with these policies. So why not just operate everything through the foundation, which has no taxable liability whatsoever, no liability to file a return whatsoever. And so anything that comes in is 100% uh, above reproach, outside of their jurisdiction, and yours to spend. So there's really not, the life insurance guys are important. But when it comes to saving you from having a taxable event because you're getting a loan versus getting income, it's not necessary when you're out of the system. Um, but again, if you can get a whole life policy and get yourself in a position where you're protecting your family, or a term policy where you're protecting your family, or a whole life policy that pays for the premium and the benefit for the term of the policy, or until you die. I think that's very advantageous and very smart for people, but you got to watch the jurisdiction on the application when you're submitting for the policy.